Friday, 2nd of July. We're off and racing, middle of the year. I was chatting to the team the other day and they were saying, we can't believe it's July, already halfway, the year's half done. Crazy times. All right, well, good morning. Welcome to another Wealth Coffee Chat. Hopefully you guys are all well. Looks like that might be up there. I'll put that down there, just make sure we've got it all in line. Good morning to you guys. There's Kevin, all the way from Florida. Morning, mate. Naomi, Alison, Lena, Melinda, Gemma. Good to see you guys out and about. Nice and fresh. Good morning, Yasmin. Good to see you guys. Graham, how are you, mate? So yeah, the old Friday. There we go. Love of my life. Quick shout out early right now. This evening or this afternoon, 5 o'clock, 5 p.m. Andy and I will be doing Wealth, Wine and Wisdom, where we get a chance to debrief the whole week. Andy, from his point of view, when it comes to the world of financial planning, finance, banking, and the share market. And certainly I'll dive into the property world as we do. Indeed, Riley, happy Friday. Good to see you, my friend. And James, awesome to have you aboard. Well, listen, anyone who's new, give us a shout out. Jason Witten's my name. Been property investing over 20 years and helping people as a coach, property investment coach with me and my team over 18, coach thousands and thousands of people, learn a few things along the way, and get a chance each morning to share a little bit of what we might deem as a bit of wisdom, some wealth in the Wealth Coffee Chats. So welcome along. Hey, listen, I'm noticing already, and I think I've said this a few times, that we're seeing the media start to report really interestingly on the property prices, the property world. Listen, last night, and I don't watch the news myself, but I overheard someone else watching it, and the news reporter last night was saying, "Oh, we'll just quickly check in on the property market," and they were reporting the property market like the stock market. Oh, the Dow Jones up, 5 points last night. The Dow Jones down 5 points tomorrow, and they were like, "Oh, Victoria up, 1.1%, Queensland up 2.3%. And I thought, how ludicrous is that? Because, gang, the thing with the property world, the property market, it doesn't move fast. It's not meant to. It's not supposed to. And my little sort of shout out warning today for everyone listening in is if you get caught up in this, I don't know what, it's a push. It's a something to report and see the property market like the stock market, then you're going to lose. It's actually a real bad, that's not even proper English, but it's terrible. It's a terrible mental disposition to be in if you're going to sit there each night thinking, oh, did my property go up today or did my property, go down today? Like the stock market. The stock market can move literally in milliseconds across the world, okay? And property cannot. Property does not move that fast, gang. And what I can tell you right now, if you get caught up in this rhetoric when it comes to the media or looking at real estate weekly, monthly, and going, did I make any money this month? It's an absolute trap for you and your mental psychology when it comes to the property market. Yes, did my rents come in? Absolutely. How am I going with my rents? Did they get paid? That's what you should be checking, right? Property values moving monthly up and down, absolutely ludicrous when it comes to reporting and thinking that that is normal. Gang, it's not bloody normal. And it drives me insane when the media get on this like it's a new fresh thing. only bloody 9 months ago, they were saying, oh, the world's ending, property market's going to collapse 50%, run for the hills, it's over, which was bullshit because me and Sam and only a handful of others, a handful of professionals in Australia were going, what rubbish. Matter of fact, we're dealing on facts, not fear and ignorance and stupidity, because the property market in Australia has the lowest production supply right now it has ever seen. All right, the construction industry is not producing anywhere near enough bits of real estate, even for the lockdown, and even for no people coming into Australia. We've got a shortage. People are lining up around the block to get access to quality pieces of real estate, either to buy or to rent. And it just drives me insane that the media get on it as a bunch of rubbish. All right. So my shout out for you guys today is that stuff is not what we should be looking to when it comes to our strategy, our focus as a property investor. Certainly, if your property values rise, we do an equity lock, don't we? We get access to the equity to keep moving forward if that's possible, and we keep an eye on that sort of stuff. And Jared's giving it a shout out right now. I think it's only going to get worse, gang. In the next 2 to 3 years, this is what you can expect. Jared is hit the nail on the head there. There's a mass shortage of timber. I think I've said this a couple of times in one of my videos, gang. Worldwide, there's a mass shortage of timber. And some of our builders have already told us they're going to be using steel frames, metal frames, and the prices are going up. We're already seeing the construction price go up with properties as we go along. So the idea is that we need to make sure we don't get caught up in this daily, weekly, monthly rhetoric as a property investor, and understand this gig, this thing that we're doing. It's a marathon, not a sprint. It's a long-term gig team. Buy well, never sell. But here's what you can expect, and I've done this in numerous videos right now. The cost of money has decreased to our lowest cost of borrowing we've ever seen in Australia's history. Okay, it's the lowest. Now, can it go any lower? I don't know. Maybe down to zero, but I think at the moment it is where it is. The banks are still making money, gang. I've done this before. The banks are actually making as much money now as they were 10 years ago. Okay, and it's cheaper today, dollars-wise, like cash out of your pocket. It's cheaper today than 12 years ago to have a $500,000 mortgage. Let that land. 12 years ago, interest rates 8.5%. Today, interest rates 1.9%. It is cheaper today to have that mortgage than it was 12 years ago. Gang, money is cheap. And what happens is your disposable income, when interest rates go down, your disposable income was the same whether the interest rate was 4% or 2%. But your net gap now, you can spend more. Your disposable income goes up because interest rates went down, and now people can afford to borrow more and buy more. Okay? So that's what's happening. And you'll see this, you'll see stuff go on out in the marketplace. And I actually saw it the other day. Sydney, the worst monthly growth property growth for over a year. I'm like, what? Like, when did we go to measuring properties monthly? What bloody rubbish? All right. So, but the average median price in Sydney for a house is $1.3 million. The average wage is less in Sydney than it is in Canberra. So, gang, the only way property prices continue to rise when it comes to wages is where there is more disposable income than the average price of the property. Okay? Now, there's other things, obviously, with quality of the property and the location and, you know, supply and demand, all that sort of stuff. But at the base bones level, if you're on $150,000 in Sydney, you can't bloody buy anything because you can't afford it. But in Brisbane, you're on 150 grand, you've got your choice up to 800, 900, $1 million bucks, right? That's what's going on. And so the average price up there is, let's say 650, you're in the money. You're not being average. You're paying 700, you're paying 800 because you want a nice house. It's your home. And that's what's going to continue to rise. Where there is space, where there is average price space between wages and property prices, those areas will continue to rise. And in places like Sydney and some house pricing stuff in Melbourne, it's hitting a ceiling. It's hitting an affordability limit now when it comes to servicing and borrowing and mortgages. All right. So there you go. Anyway, bit of a rant today, but yeah, it drives me insane. It gets me annoyed that, you know, the media start to report on this stuff like it's the share market. And it's bloody not, gang. It's not the share market. Don't get caught up in it. Understand some facts, because I'm telling you right now, some of the fear and stupidity will be coming. Fear and stupidity is on its way. It's an absolute guarantee. But it might take us 6, 12, 18 months to come along. But don't buy into this monthly reporting and then like, oh, Sydney didn't go up this month. Oh, Sydney must be cooked. Or Brisbane didn't go up this month. Brisbane must be cooked. Rubbish. Stick to your plan, your long-term plan, your long-term strategy. Keep yourself going when it comes to your property portfolio. So, you know, hopefully that makes sense, gang, along the way. Thanks, Craigie. Good to see you, bro. Shay is in 2 places on Facebook and in YouTube. Morning, Candice. Good to see you. So, gang, I think that's about it from me. Wealth Coffee Chat done. If you want to join myself and Andy this evening, about 5 o'clock, we'll be going live on this channel and a bunch of others, and we'll be doing a bit of a debrief on the week, what's going on, stock market, property market, things in general. We've got a bunch of things to share and learn, and we'll be doing a bit of a focus on end of fin year. Bit late now to do anything about it, but it might be something good for planning next year when it comes to your tax world and things you might want to manage, minimize, or plan for next year. So that's it, done and dusted. You guys are awesome. Great to have you here with me today. Thanks for joining. And yeah, see you next week for Wealth Coffee Chats at 8 o'clock or roundabout. And see you tonight at about 5 o'clock if you're up for Wealth, Wine and Wisdom. All right, gang, that's it. Done and dusted. Take care. Have an awesome weekend. See you guys. Bye-bye.